is April 3rd. This is a Friday, I think. I'm losing track of days here. This is the video log. It takes 30,000 to a million, of course. Very far from a million right now. But today, what I want to talk about is just what I've been doing with the account lately, some of the plays that I've been doing, and my overall outlook on the long-term future. Near term, it's going to be chaotic. I think everybody knows that. All kinds of problems are now arising as a result of this, these shutdowns and inactivity. And I want to talk about some of the lasting effects that I foresee coming and maybe some actionable steps that I could be taken, but probably not. So let's go into the account here. I'm sitting at 56,000. I was up about 1.5%, which is what the overall market was down. I'm sorry, I was down 1.5%, which is about the same as the overall market. And I was up as much as 57 and 200, 300 at some point. But here are some of the big movers. Of course, Apple was down. I'm losing about $400 plus from Apple because I have a call here on Apple as well, $300 call. Who knows what that will happen, but that's already in 2021, so all the way in 2021. Maybe I'll buy another call at some point. Then I have all these little funds. Realty income, which is my biggest play that I'm trying to beef up, and that's down about 4.4%. So the reason I like realty income here is because they're going to be one of the companies that are not going to get hit so much by the rental decreases, because all their tenants are basically, convenience shops like Walgreens and 7-Eleven and all that. So what that means is that they're not going to be missing payments, right? I mean, these guys' business is pretty solid. It's not booming or anything, but right now those are the stores that are open. And yeah, they probably have had to hire extra staff to clean and disinfect everything, and but they're still making money. So anyways, these guys are not going to be having problems paying off the rent for their real estate, for their commercial real estate. So that's why I'm so heavy in realty income. I think they're going to survive this huge crisis and depression for quite some time, and they're going to come out healthy out of it. So I'm going to put more money into it. I have $3,700 into it right now, but it's hard to put more money into when I'm unemployed, right? I have no income. So it's going to be interesting. If I do get the $1,200 stimulus check, tax credit, whatever it is, I'm probably going to put it all in realty income, whatever the price is at the time. So, but I think they're going to survive pretty well. Okay, so moving on here, I have RSX, the Russian market, which is very heavily tied to the price of oil. Went up a little bit today, and I think I saw the call. Yep. I saw the call against the Russian market here. And I think it's a $20 call, expires on May 1st. And so I'm going to be getting like 30 some dollars extra from that, as long as the price stays under 20. And it looks like it could. I mean, I don't see the oil prices rebounding very sharply anytime soon. So the last time this thing was over 20 was on March 6th. I don't know. Well, we'll see. But even if it does trigger, my average cost is 19.4, so I'll be making money on the trade, 60 cents per share, and also the added premium as well. So it'll be a profitable trade. So interesting stuff. One thing I wanted to see here is, look at this dividend yield, 8.64. So if prices were normal, of course these numbers are going to change. The valuation right now sits at 6.74 PE ratio and 8.64 dividend yield. Pretty insane. Okay, so moving on from Russia. Reading precious metals was down. All the miners were up in the beginning of the day pretty much, but they fell off midday. They sold off. uranium. So Chemical was the big savior here. So as Chemical was climbing up, what I was doing here in the last few hours is I was selling calls against my position of Chemical. I know, it's not an optimal level to be selling calls at. My average entry price is 957, and so I was selling $10 calls and one $9 call here. Um, so I even have 5 sales here for all the way till the end of the year. And the reason I'm selling it so far out is because I want the cash into my account now. And also the other reason is that I don't see things. Well, I mean, uranium could act pretty independently, but I don't see things in general, including demand, real demand, pick up anytime soon. And I want to talk about that in a second. So moving from chemicals, so that's been a source of some of my call option selling. I think I also sold energy transfer. I sold a call here. My average cost is 9.09, which is far above what the company's worth right now. So I sold a $6 call, which is very close to the current price. But I need some kind of way to generate cash because the way things are right now, it's very hard to come by cashes. And I need to generate it somehow. So I'm going to have to start selling calls and puts again. And well, not puts because I don't have any cash, but selling calls against my options in order to get some income. So here we go. I have this one sold at like $45 and it expires May 15th, so that's $45 in the account if it expires worthless. I want to bring attention to this. Remember how Russia was like 8% dividend, 6.7 PE? Well, look at this company. If times were normal, which they're not, this company would have a PE of 3.7 and a 24% dividend. Amazing. Okay, so energy transfer sold a call as well. I already have sold a call against SBRA. And so I have a bunch of options already. You can look at them over here. These are my option plays. You can pause the video at any time and read it. This is the asset in question, what call it is, and the date, and how many. And these are all my holdings at the moment. You can pause at any moment. All right, and I have, of course, I have the UK market here. Not doing too hot, but it's another one of those. If times were normal, the PE would be, well, actually not that low, but dividend yield would be 6.2 for England, for UK, sorry. Pretty crazy. All right, so what's going on here? I mean, why am I selling calls for something that is bought at a much higher price? I mean, that goes against what I try to do. Is this crooked? What's going on here? Well, the reason is that I don't see things recovering very sharply anytime soon. And so I was thinking about this, today, yesterday. And of course, it's probably nothing new, but there's a few factors here that I see coming into play. One, I think that people are going to be in a lot of debt coming out of this, not just people, individuals who have to sustain some kind of spending. They've already cut a lot of their discretionary spending, right? But they have to keep making payments. They have bills, they have kids, they have to pay for food, they have to pay for electricity, bills, everything. So people are going to go into debt, all right? I heard about stories how some lenders are giving, breaks to their tenants. I'm not lenders, sorry. Landlords are giving breaks to their tenants and stuff like that, and allowing them to pay as a loan, over a certain period of time. But these people are going to be strapped with these payments for quite some time, right? So there goes their discretion income for the foreseeable future, years ahead, maybe 1 or 2, 3 years ahead. They're going to be just trying to pay off debt. So not only that, but in order to pay off the debt, because these are like financially, fiscally responsible people, they're going to be getting hit. It's not just um, the poorest of us. So we have this giant pool of debt that has to be repaid, and there's going to be obviously no savings. Everything's going to go into that. So there's going to be no investment. Also, there's going to be no discretionary income. And that's where what the biggest topic is here. That's what I want to hit the nail on the head on is the discretionary income. So, 70% of the US economy, as we all know, is service based. And a lot of that stuff is just, travel vacation based, fun, you know, piano lessons, tennis lessons, going out to restaurants, movies, all kinds of stuff that you don't really need, okay? You name it. We just entertain ourselves, right? The only type of entertainment we're going to be paying for now on is Netflix and Amazon Prime and Apple Plus or whatever else you watch on TV, or maybe some gaming services, but that's it, right? All these big spending outside of the house is gone. And so a lot of industries, like the teaching industries, etc., are going to get hit. But not just that. I mean, everything is going to get hit. Okay, people are not going to be paying as much for advertisement. Everybody's shrinking, and this stuff until the debt is paid off. That's the point. Is that until the debt is all paid off, or at least it starts looking better, where people start feeling more comfortable about their financial situation, all these industries are not going to recover. And so they're just going to be stuck, very, very extremely slow. And until the economy is buzzing again, they're not even going to be viable. All right. So I'm thinking it's going to be a very, very slow recovery. Very slow. So for that reason, right, in general, I think I'm better off adjusting to this like 50% discount type of model and start doing selling calls and getting money and then start selling puts against things at these price levels, because I don't see them getting meteorically higher from here. If this virus thing was over, if there was a cure, not a vaccine, but a cure developed within the first few weeks, markets would have been up in all-time highs. But even if there's a cure now, right? Not even a vaccine, just a cure, okay? I don't even see the markets going back up to the levels that we were in a quick order. So it's just the damage has been done. It's too much, right? It's too much. People have already changed lifestyle, changed plans, and people are fearful of what's the next thing that's gonna hit. Okay, and now they're gonna be more conservative about their spending, about their savings, about their debt levels, about their lifestyle. Everybody's gonna get more conservative, and that's gonna last for a while, just like after 2008. But I think this one might be even longer. I'll make another video on Monday. Peace out.